This video is for you if you want to get good and master on how to analyze your market from your bias, from the area of interest and the liquidity, so that you can be able to be profitable as a trader. This is if you really want to rely on yourself and now to just like, okay, wait for somebody else to break trading for you or somebody else to send you signals. You need to stay tuned and watch this video right now, because it's going to be more. There's a lot of information that I'm going to share in this video regarding trading price action, using structure, using Fibonacci retracement, and also just basically trading like Nikkei chart. Without being said, let's jump right in the chart. Based on my strategy, 3 keys or 3 steps, we just have to follow 3 steps. And these steps are, we need, in order for us to have a breakdown and to be able to know what to do, we need 3 things. We need to know the bias, we need to know the area of interest, and we need to know the liquidity, because these are very key. And in order for us to, and I'm going to break everything down for you. So first of all, let's talk about bias. What is bias in the market? Bias is just strictly knowing the direction of the market or knowing the condition of the market. What I mean in an instance is, what is the condition of the market? Is the market trending? Trending means like, is the market trending, whether it is sell, or is the market trending? Then is the market consolidating? Consolidating is when the market is moving from one zone to another and nothing happen, nothing surprise is gonna happen in this area. This is the different type of market condition we have, and you have to be able to identify which one are we before you can be able to know whether you want to, you know what they always say, like trade with, you know what they say, that use trend as your friend, trade with the trend, don't trade against it. So exactly the same thing, we have to be able to know whether we are uptrend, whether we are going on a downtrend, or where the market is consolidating. And now we'll go to the area of interest. What is area of interest? Area of interest is when area of interest is where it's possible for the market to reject or where the market to react. Let me just put it that way. So let's assume that the market is on uptrend. Then we're gonna have what? Higher high, higher low, and higher high, and higher low. Let me put it this way. So now on this area, this key zone happens to form a previous, we call it resistance turning support. This is resistance turning support, so it means that this is the high, the previous high. We have a new high now, turns a new higher low. In this aspect, this is the area that is possible for the market to react, whether to buy, right, or whether to push below retest, then create a new higher high and changing it, like, changing structure. So this is why this area is very important when it comes to trading. So if you really want to get good at analyzing the market, you have to be able to determine, okay, what is the market doing currently? Is the market testing a new so as a trader, let me tell you this, as a trader, your job is to be able to identify this zone. Once you're able to identify this zone, you know that you are not supposed to place trade in this zone, in this area that is not area of interest. Area of interest is just like, okay, you know that the market is going to react in this place, and you have to find a way to be able to enter at this particular zone, not this zone, because that is not your job to do. When it comes to area of interest, we don't just enter trade in this zone. We don't enter trade in this zone. We only enter trade when, for me, I don't enter in this. Some people enter in this area and they put their stop loss here, but for me, I enter at this point and my stop loss is here. I hope you understand what I'm trying to explain to you. let me just try and delete this stuff. So since we know the area of interest, now what do we need to look for? We need to look for liquidity. And what is liquidity? Liquidity is when there is multiple sales order and buy orders. It's when sellers are in the market and buyers are also in the market. So let me just give you this narrative. Let's say the market is consolidating, right? It's ranging in one particular zone. Then sometimes you see the market come to this point, then take people, then they now go. Then sometimes it break above, then it come this way. Then this what I'm trying to explain to you is that when it comes to liquidity, this liquidity is just area where there is multiple buy and sell order. And with that being said, this area is called liquidity, where sellers, people who bought, who put their stop loss here, is being taken out, and people who sold in this area have been taken out. That is where liquidity grabs. So this is the thing that we have to like find how to be able to identify this liquidity, because it's very, very important when it comes to entry. And that is where we get to enter. It looks like we enter from sniper entry and we don't get to get liquidity from the market, if you understand what I mean. I'm going to go on the chart right now to be able to explain what I mean from the buyers to area of interest and to also liquidity, and how I use this and the pattern that I use to enter my liquidity and make money using strictly price action. So now let's have a breakdown on what we expect to happen this week. First of all, we start from monthly time frame. The monthly time frame still shows that we're bullish, right? Then from what I'm saying, we still need the market, to come to this place before we can know, or before we see whether the market is going to retest it and go down. Rather, whether we see what's going to happen. We see what is going to happen at this particular zone, which is let's just say 150 mark. We see what's going to happen and what the market is going to react. There's going to be a lot of reaction in that spot, because that's the psychological zone. And moving to weekly time frame, we saw that weekly time frame already broke this area. Like, we spent so many weeks in this area, and there was no much involvement, there was no much excitement in this area. It was just because the market was just consolidating in this area. Of course, there was a lot of money was made from day trading, but for swing traders, there was not really much something to be able to hold up for. But now the excitement is coming a little bit, because we just broke the structure. Then just as we expect for a retest. And if you watched my breakdown on Sunday, if you follow on my Telegram, you see my breakdown that I posted, that we expect the market to come here and retest, which it did. But I don't like the way it closed. It closed on weekly time frame, which we expected for the new week to open and come and fill it. As you already know, that once there is something like this, we only expect something to fill it. Based on what we are seeing, I'm expecting for the market to come, fill it up, then before we can see any reaction based on weekly time frame. Then, without being said, moving to daily time frame. So daily time frame, we can see how the pattern the daily time frame is creating for us. We can see, as you can see, we have double top right here, and the market is giving us a retest. And what do you expect after a retest? We retest a push down. In this aspect, I'm very I'm gonna be watching this area, which I might, if it gives me an entry for sell, I will take a sell for a short time, but in a long shell, I'm still expecting for a buy. So this is what I'm expecting. I'm expecting for the market to do this. Of course, I can only react, I can predict. Whatever the market do is what I'm going to react to. If the market will give me an opportunity on a smaller time frame to sell, I will sell. But I will also be expecting for a buy in this area to push above this area to create a new higher high and retest it, and we can go for a bullish. Other hand, again, we can only react to the market, we can predict, right? So that one you have to pay close attention into that. Okay, you can only react to the market and not predict the market. And looking at 4 hours time frame now, 4 hours time frame is giving me another trade that I need to be watchful of. And the reason why I said I need to be watchful of is, number one, we have area of interest right here, then the market is testing it, and now we also have this. Then we have to be careful because again the market has been creating higher high and higher low. From this area we have this, we have this, we have this, we have this high, and now we are creating the low. Then it might end up breaking this. For me, I would love for it, if it break, then probably I'm gonna be looking for a retest, and that will be my entry for continuation of the trend. But if not, I'm also going to be attentive and pay more attention to whether we're going to, on a smaller time, whether we're going to have this structure. I'm going to be, like I said, I'm going to be more attentive. But I'm seeing overall, I'm seeing buy in this area. But I'm not going to be rushing into trade. With that being said, I hope you learn 1 or 2 things from this video and this breakdown. And if you do, don't forget to click subscribe. Don't forget to like and comment what you learn, and comment what you are looking to trade this week. And don't forget to give us and don't forget to subscribe. Peace out.